Let's pull the scanner up. And we'll look at the binaries. And we'll say we're looking for ones that are no more than 35 bucks. Okay. That'll expire in the next 30 minutes here. And we're looking at the US indices only. Okay. So now instead of clicking all over the NetX platform, I've now narrowed it down to, you know, what's available. So those are all the ones available on the 120 strike. So we're going to come up and we're going to see, you know, we're going to focus on the, let's just focus on the S&P for a moment. And so here when the new strikes come up in about a minute, we'll be ready to be watching and seeing what's potentially going to happen. If I go over here, I can actually get an idea of the next expected range. So we got 2052 down to 2044, 45. And so we'll check that out when we get back right after this. All right. So as I said, we were looking right around 2040, 6 or so, and right around 2052. So we'll see how this trade works out. But basically, looking at doing a short 2046 and a long 2052, and just letting the market, setting my take profits. Basically, I'm going to lose, up to 15 bucks on one side or the other, most likely, unless it hits both sides, which is pretty rare. And so I need to make, $30 because I'm risking 30, and ideally cover the other 15. Okay, on the trade as well. And so ideally, if I can make $45 on this trade by the end of the 20 minutes, which means I'd want to, sell back. Right around here at around 40, or buy back, I'm sorry. So I sold at 84, I'd want to buy like around 40. Or if I bought, I'd want to sell back right up here around 60. So sorry for the, it's a little hard to draw with this snippet thing. But, so exit it, basically this is my total that I'm trying to make on one side or the other. If I do that, then that gives me a 1-to-1 risk to reward. Why would I not just hold it would be one of the questions people often ask. Well, because it can easily go up and then just pull right back on you. Okay? So I'd prefer to not have that be the case. Anyway, so we got that trade. So like I said, it can go down, pull back up. And that's an example of doing a 20-minute strangle. And, setting take profit orders and all that fun stuff in there. Okay. All right. An update for you. We did hit our take profit on that. Easy 300 bucks in the last 15 minutes. Gotta love that. I'll bring up those trades and review it for you. Just wanted to stay on topic real quick. Now let's go back and let's do a recap on the S&P trade because we opened it and closed it right here. So pulling up back the S&P, and as you know, I showed you the screenshot. We're doing all this live. And it's fun to do some, live trades on air, and just to let you see them in action, okay? And let's look at what we were looking at. So what we were looking at first is we were looking to do a strangle if volume was exceeding expectations. So volume was exceeding expectations. And we were going, hey, was it, moving up, or could we get one cheap? Well, volume did drop a little bit on that 5-minute period, but we could still get them for a good price. Wasn't just a massive decline in the volume. And then by the time we got it on there, right there, like, boom, the thing is actually going up. So we got in right here at the end of this 20-minute period. And so let's look at the executions. All right, let's line them up, see how they happened. So we went in here, and we'll look at the entries first, then we'll look at the take profits. And you'll notice it doesn't say demo in here, so these are live trades. And I point that out because I want you to see that I do this. I don't just talk about it, okay? And let's see. So going on down. Oh, lost my ticket. Where'd it go? It's going behind the screen. I'm trying to keep it on top of the screen. We got that one, and we have this one. Okay. Let's see. So move this on down here. There we go. We'll scroll this down a little bit. And basically here is where we, let me move that over. What I can do is, all right, so actually since we went both directions, we bought a 2051.85. Okay, so we bought a 2051 85 is pretty much right here. And we sold, okay, a 2046.25 contract. So go right down here, 2046 contract there. We did them right on the top of the hour, so I should actually move those arrows over. So you can see the execution time there was at 140. Okay, or sorry, it was at what, 140 and 53 seconds. Okay, notice both of them. I mean, like there's like 20 seconds between them there. So that's just me being slow on that trade, but because we're talking through it all here. And I'm just delete this stupid arrow. Make a new one. It didn't want to move. All right, so right over here. So basically, we're looking at saying, hey, the market's gonna, you know, bust through like this level down here, or you know, maybe a little bit higher. And so let's take advantage of that. Let's see if we can get some contracts on cheap. Well, I can buy one right here for $15. I bought 10 of them for 15, so I had a little over $150 risk. Then over here, I sold to them for basically $84.25. So, you know, also about $150 risk on the trade. And then what I did, as soon as I put those contracts on, so I bought 10, saying the market was going to go up. I sold 10, saying the market was going to go down. And then after that, I put in a take profit order. So that was, you know, we went back and we were going through those. And we can sort of look at the life of the trade here. Okay. So on the life of the trade, we went in, we bought these, we sold these, we just went over that. And then we put in the take profits right there. So basically said, hey, I sold it for, I bought one for 15, I sold one for $15 risk, $85 risk, $15 risk. So just keeping the math simple. So buying one for 15, selling one for $15 risk, that's $30 risk. So I need to make 30 bucks. And probably I don't expect to win on both sides, so I need to expect one side to lose. So I need to net 45 bucks on one side or the other. Okay? So yeah, I just, you know, I'm not worrying about the, you know, the quarters here. I'm just going in for the dollars, not getting too picky. So 84.25, basically 40, you know, 45 bucks lower right there, $40, 15.25, pretty much sell 45 higher, right around 60, put in my take profits. It goes on down and it's profiting while it's dropping. Okay. So we see as it was moving down right here, I was actually up a couple $100 on one side. But if I closed out right then and it kept dropping, then I'd make 200, lose 150 on the other side, I'd only be up 50 bucks. So I could do that. It's not a horrible idea. You can sell one, buy it back when you break even on the other side. If it oscillates back, awesome. But, you know, I found this works well. And then, you know, market keeps moving. And then it starts going back up, right? So it starts going up, starts going down. And as I see, you know, we see the oscillation. So it's going up, it's going down, it's going up, it's going down. We're making money on both sides, making money on the short side, making money on the long side again, and then it keeps rising, and then it closes out when we're basically P&L's up like, you know, 600 on the trade. And so I think we came out a little bit ahead on that one. But anyway, so went on up there, and then 465. There we go, not 600, 465. So we're at 61.75 right there, current price. Boom, I execute my order to get out of the trade. Okay, so we see we're up 465. Well, I lost basically $150 on this side, right? I made $465 on this side, right? So if I made, you know, let's just keep it simple. If I lost 150 and I made 450, then I get to keep 300. Okay? So I lost 150 on my short. I made 450 on my long. I get to keep $300. So after that, then you can see my order got executed to sell right there. Sold at 60 bucks. Now, if I would have held on to it, would I have potentially made more money? Yeah, but that thing's like right on the price, okay? I could have also lost everything if it would have expired just a tick below 2051.85. And I mean, look, we had another one right here. If you would have put that thing on, you could tell we already would have made our profit, right? It's already moved up the few points needed. You already would have made another $300 just in the last 5 minutes. So that was $300, and we entered on the trade at what time? Let's see again, just to put them side by side. 13:20. 13 minutes later, we closed the trade out for profit, did 10 contracts, made $300 in real money. Right here, same thing, 5 minutes. I can already show you. I mean, I was talking through this trade, so I missed that one. But right there in 5 minutes, I mean, you put the trade on right at the top of the hour like we did before, put on the strangle, set the take profit. It's already hit the take profit goal. Okay? These are really simple trades to execute. Looking for about a $30 risk on the trade. You know, don't get picky about, dollars, a dollar here or there. And then we're looking to pretty much make a $45 profit on either side, so it covers $15 risk on the other side. The big thing is I don't just want to willy-nilly do these because it can be really flat and you can just get hammered. So I want it when I see volumes exceeding expectations. Ideally when I see it rising, okay? And I want to know what that expected range is so I'm not just randomly buying strikes that are way, way too far beyond the expected move. So over and over again today, it did very well. And if you're making 1-to-1, if you at least make, at least half of them profit, you're good. And look at how many of these hit the range, hit the range, hit the range, hit the range. That one right there in the last 5 minutes, boom, hit the range. Came on down here. You would have taken profit. We take profit before we hit the range. Go right there, hits the range, goes down, goes up, profit, hits the range, hits the range, hits the range again. I mean, that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 trades in a row. Okay? So this is why I like Nadex. This is why I'm always talking about Nadex. And, so I want you to, get the concept there, and hopefully I'm just trying to help you out.